Today, I'm sitting down with David Banister, a veteran market forecaster who's been living and breathing Elliott Wave patterns since the early 2000s. And he's built an almost 80% win rate swing trading the 3x ETFs. We get into how he maps crowd psychology, nails major turning points like the 2009 bottom and the recent Nvidia reversal, and then turns these moves into tightly risk-managed leverage ETF trades. We also talk about how he sizes positions, how he scales in and out, and keeps emotion from wrecking a high-octane strategy like those 3x ETFs. If you want to understand how real traders use Elliott Wave, Fibonacci, and behavior to time big swings in the S&P, NASDAQ, Biotech, and more without day trading themselves into madness, you're going to love this conversation. Here is my conversation with David Banister.
All right. I am here with David Banister, and I'm so happy you're here. Thank you for coming on. I'm really excited to have this conversation. Before we get into your 3x ETF strategy, which I am very excited to talk about, I really want to know about you. Like, how did you get into trading? What was the thing that sparked it for you?
Yeah, I came out of college in the late 80s. And for those of you around my age, you'll remember the 80s were kind of a rocking and rolling time on Wall Street. I think that movie about Gordon Gekko and whatnot was out. So it kind of got me interested. Yeah, Wall Street when I was in college. Trump had a book out called The Art of the Deal. So there was all kinds of excitement around the market. And so I kind of got interested during the college business, admin, and finance that I majored in. And when I got out of college, I was trying to get a job on Wall Street, as a stockbroker, because everybody in my class of 87, that's what we all kind of wanted to do. And one of the guys at Prudential Base Securities I spoke with, he was the vice president. He goes, "You're 22 years old. You're going to get chewed up and spit out onto the street." He said, "You need to get some experience and do some other things." So I got into like financial insurance sales and that type of thing for quite a while. But the whole time I was watching CNBC and I was on websites and on blogs, and just really my passion was always trying to figure out the market and what are the patterns and is there a way to get some kind of an edge. And so that was where it really started. Well, through then, and if you recall, into the mid to late 90s, we had another huge run up in the small cap tech.
That's an understatement. It's an understatement.
It was a 5-year run. That was amazing. And from 95 to 99, I think even the S&P 500 was up about 20% a year. Small caps more than that.
More than that.
Even more, right?
Yeah.
And
did you know that?
Nobody wanted to buy real estate. Everybody just wanted to buy stocks. That was the time to buy real estate, was the late 90s. Funny.
Do you remember? I don't know if you remember, but the low in 98, there was a little blip in 98.
Yeah,
it was called
the
Asian contagion.
Yes.
And from the low of that move was around 1200 or 1250, if I remember. The high in January of 2000 was like 5,200. It had tripled in that 18 months, the NASDAQ.
Yep.
That's
Absolutely
like the NASDAQ today going to what? Like 120,000?
Yeah, some crazy number.
Or maybe that's a Dow. I'm sorry. Like 75,000. Right.
75,000 on the NASDAQ futures right now would be a triple, right? Yeah.
Insane.
So
it was,
that's what got me interested. Was there was a lot of excitement. Then we had the .com bubble and the crash, and then another bull market. So it's just a fascinating area to be in, I think, for a lot of people.
So what was like your first trade? What was your first dabbling into individual stocks where you were like glued monitoring the price of that thing?
Yeah, I think I was about 26 or 7 years old. I had just gotten a pretty good job. I had a few dollars, not a lot, but I was starting to save a little money in mutual funds I'd been investing in since I was young. But that was kind of boring, right? So I bought, I'll forget the name, but it was a large biotech company. I bought stock in, I think it was GlaxoSmithKline. We're talking like 1990. And I don't think that did all that much.
They were,
yeah.
The big name pharma stocks were very hot in the 90s.
That's right. So I was excited about that, and that kind of got me starting to really review biotechnology, which is one of my favorite sectors. Even very volatile, but definitely a sector I enjoy to this day. That was my first stock. I think I put $1,000 in. I don't think it did a whole lot, but it was my first foray into stocks.
Okay. And what was your first job on Wall Street?
Well, I actually started my own investment advisory firm in the early 2000s after getting my securities license, and I worked for our Navy Federal Financial Group. And then I left them after 2 years and then started my own practice where I live, built that up pretty nicely. And then in 2009 is when I closed my practice. Now, you market historians will remember the '07 to '09 window was pretty rough. '08 to '09 especially, very difficult. I think some of the small caps and a lot of the NASDAQ down as much as 70 to 80%
Yep.
from the
Yep.
highs.
Absolutely.
And I had
Even the
clients that
Dow.
were very concerned. Yeah, the Dow was like 50%. The larger cap techs and whatnot were more than that. And that was in like a 5-month window. It was one of the worst crashes really in market history. And it got me rethinking, I've always enjoyed blogging up to that point. I had a large following online on Raging Bull and different websites. I was a pretty top followed person for a long time, just because I was passionate about the market and Elliott Wave theory and behavioral trading, and the things that I was doing were a little different. So I had a large following, but that's when I decided to close my practice and go online with a partner who had seen my work in the blogs. And he said, Dave, I don't know if you're interested in getting online and doing what you do online, but you're pretty talented. What you're doing is very different. It's very contrarian. And I said, well, I have to close my practice to do that. For compliance reasons, you can't run a securities and investment practice and then be online writing stuff. So I thought about it for a year. Long story short, I started online in August of '09, just sharing my ideas. And I, again, started to develop a pretty large following. So I've been doing that for just over 16 years now.
Okay. And in '09, what was your strategy when you first started? What kind of things were you talking about?
Yeah, I was very big, as I am still, into market forecasting, S&P 500, NASDAQ 100, gold, etc. I was on the street.com frequently discussing gold specifically for their little gold segments they would do. Everything was centered around Elliott Wave theory that I had learned, but kind of with my own twist. Elliott Wave theory was developed in the early 1920s, 1930s by R. N. Elliot. He felt that the markets have repeatable patterns that repeat over and over again in different cycles. And if you can learn and kind of discern those patterns, you can be a step or two ahead of the crowd most of the time, whether it's a bottom or a high or an intermediate movement. So it's a very difficult theory to apply, to be honest. I mean, I studied it for a few years in the early 2000s and started to really grab it. It's just something that registered in my brain. I can't hit a golf ball, but I can do Elliott Wave theory. So I started the services with a market forecast service, literally S&P 500 forecasting. People started really getting involved with what I was doing. And then stock trading, so swing trading, not day trading. I think that's a little bit too crazy for me. It's a high stress environment. But the swing trading I found in all of my years of work is really your best overall risk adjusted, upside return, in my opinion. So I was taking my Elliott Wave theory analysis, combining it with a few of my own soup recipe ingredients, if you will. And I would assess the market patterns, and based on the market patterns, we'd be more bullish on individual stocks or maybe less bullish, or we'd have high percentage allocation to swing trades or a low percentage allocation. So that's still going on to this day, 16 years later.
Wow. Awesome.
Yeah.
So let's talk a little about Elliott Wave, since that's still your main focus, right?
Yeah, absolutely.
Still doing that. You're still doing your interpretation of Elliott
Yeah.
Wave patterns in the market. And so my question to you is, if somebody never heard of Elliott Wave, like the basics of it, can you explain
Yep.
it in under 3 minutes,
Yeah.
some of the basics
Yeah,
of
absolutely. And I keep it pretty simple. There's a lot of Elliott Wave prognosticators out there that
it? Yes, there are.
overcomplicate it. So it gets a little bit of a bad rep. Robert Prechter was kind of the guy behind the growth of it in the 80s and 90s. But again, my opinion is he tended to be very bearish. He was kind of a bearish person. And when you're an Elliott Wave analyst, you have to keep a very open mind at all times. You have to be open that you might be wrong. You have to be willing to pivot. So I started to develop a way to kind of check myself. So I added my own layers of indicators in along with your Elliott Wave patterns. But the general theory is if you're in let's say a bull trend, it could be a multi-month trend or it could be a multi-year trend. You're going to have kind of a 5-wave, we'll call it an upcycle. So waves 1, 3, and 5 are bullish. So your odd number waves are bullish. The first wave in a bull cycle is upward. The next wave is a wave 2, which is the most corrective, the most short-term to intermediate bearish. The sentiment gets pretty bad. The correction's pretty harsh. The retracement's pretty big. That's a wave 2. Tends to be like an ABC. So A down, B up, C down type of pattern. Then everybody's negative. Nobody's bullish. The indicators I look at for bearish sentiment, bullish sentiment are extreme. And then you start what's called a third wave. Now, this third wave tends to be the most bullish, but it comes out of a very negative sentiment pivot. So 2009, March of 09 is a good example where the market, everybody was very bearish. And I wrote a bullish article that was published. I think I was one of maybe 2 bulls on Wall Street at that time. That really helped propel me at that point. So the third wave tends to be very bullish, very exciting, very optimistic, something that you've seen since April of 2025. The market bottomed out on April 7th of this year. That was a wave 2. Everyone was negative. Tariff concerns, all kinds of problems, right? New administration. The market looked like it was going to keep going lower. And I told my subscribers,
it was a pretty fast correction too.
It was a fast correction. So an Elliott Wave pattern doesn't have to be years or months. It could literally be weeks. It doesn't matter to me. So
let me ask you.
Yeah.
I don't mean to interrupt you. I want to hear everything you say. It's a 5-wave. There's 5 waves, you say. What time period do these waves happen? It sounds like from like a 30,000 foot view. What's your time frame there?
So that's actually a good question because Elliot figured out that there's very short-term waves, very minute or minuet waves, he even calls it, like intraday waves you can look at. There's weekly waves, there's monthly waves. So you can zoom way out to 30,000 feet and say, okay, this bull market started on whatever year, 2003, and completed in 2008, let's say. That's a 5-year overall uptrend. But within that, you've got your bearish wave 2s, your bearish wave 4s. So what I do, especially with swing trading, a little bit more short-term focus because where are we currently in the current, 5-wave pattern? Are we in the third wave, the first wave, the fifth wave? If we're in any of those,
that was my next question.
We're generally bullish. If we're heading into a wave 2 or heading into a wave 4, which is my analysis, we're going to pull way back. We're going to look at maybe some short positions, but we're going to raise cash. Another good example for this year, April of 2025 was your bottom of wave 2. And we had a multi-wave 5 or 6 month rally into November to 6950 from about 4,800. That's a huge move, right? On the S&P.
40%, 38%, right?
Big move, but it comes off a very negative environment where everybody was washed out. So the percentage sounds great, but you got to remember, we also dropped quite a bit before that started, right?
Right.
So the key is catching the majority of that move, that third wave move up. You want to try and catch it where there's still a lot of skeptics in the early innings. The market's starting to go up and everybody's waiting for another drop and it never comes. Eventually everyone piles in. That's when the top of that cycle, which was November, I told people around 6,900 way in advance is likely the area where we're going to top out sentiment-wise, and we did. Now, what did you see this week? Massive decline, especially yesterday. We went from 6,800 to 6,520 intraday.
So opened gap higher on Nvidia earnings, depending on what day you're watching this. It's November 21st, 2025 today.
Right.
Yesterday, November 20th, we had Nvidia earnings.
Yeah.
After the close on the 19th, we had a big gap up only to go into a huge reversal, which is generally a very negative indicator by itself.
Interestingly, I told all my subscribers yesterday morning, because I do a pre-market update, I said, look, we're having a little bit of an uptrend on the Nvidia earnings. but we're going to have major resistance, 6,800 area. There's risk down to 6,480. We hit 6,523. Only way I can know that is if I understand behavioral patterns. There's no other way. How am I going to predict that specific movement within 30
Do you
or
want to
40
share
points?
that chart you sent me earlier? There should be a button there where you could share your screen.
Can you see my mouse moving too?
Yes, see your hand,
Yeah,
just a
okay.
little hand.
So this particular wave is perfect to show viewers what I do. So do you see this kind of June bottom here? This is the S&P 500 futures contract. So this is your June bottom on the current December contract. It's around 6,000, okay? Give or take on the S&P 500. And you'll see these wave patterns. This was a wave one, which is your first bull wave after a big correction here. Nice bull wave, sharp wave two correction. Everyone got negative again, kind of fell below this trend line here. Everyone's expecting another down leg, right? Market reverses at a certain pivot here. Okay.
Yep.
Then you're in your third wave, which is made up of 5. 1, 2, 3, 4, 5. That's your third wave. So this is your very bullish.
So there's
very
waves
bullish.
within waves. So there's
That's
waves,
100%.
and then there's like an A through E in each
Exactly.
wave, if you will.
You got it. So I'm doing 1 A, B, C, 2 typical wave is 2 wave is A, B, C. It's a bounce up B, another get everybody nervous again here. And then I know where these pivots are usually within a few points.
Wow.
And then this third wave here is a very bullish wave. Nobody knew this was coming. Another pullback that's a little bit lighter. Fourth waves tend to be moderately negative, not very negative, just moderate change in sentiment. And then this final wave here is your fifth wave of the cycle. So 1, 2, 3, 4, 5, making up the third overall cycle, if that makes sense. So this third cycle is big. Everyone's bullish, everyone's excited. And then what happened, as the traders like to say, you get the rug pull. This rug pull is a larger fourth wave. It's an ABC. Again, oh no, here we go again. We bounce. Oh shoot, we're going back down. Everyone's negative. Everyone's expecting this down move. Fourth wave ends right about here. Final leg up just completed like maybe a few weeks ago or so. It's at 6,950. My target was 6,900. So, it was pretty close, right? And at that point, I started to tell people, look, based on this specific if I zoomed in here, based on this short-term pattern here, this is a very truncated pattern, meaning it should have
sharp. It's very sharp.
It should have probably gone a little higher. And when it didn't, that was a warning flag for me that we're going to get some type of an ABC. See this bigger ABC now, A, B, and there's a big C. See that?
So now it's in reverse.
Now we're correcting this entire movement.
Wow.
1 through 5, A, B, C, to correct the whole thing. 6,480 has been a number I've had for several weeks. We got within 40 points. That's close enough. So this morning, in my updates to my subscribers, I'm saying, listen, you're pretty close to pretty washout lows here. Your better trades here are probably going to be on the long side, not the short side. So we want to start taking some long positions, whether it's stocks, ETFs, carefully, because you'll get this little bounce and you might get one more retest, maybe a little lower than this yellow zone. So you don't want to freak out when you see this bounce and it goes down. This is when the group, the group psychology, which is what I do, everyone's like, oh no, wow, we're going down to 6,000. You're going to have everybody on CNBC negative. Every bear is going to be on TV. Okay?
Which they have been. They have been for a couple of weeks now.
And they were not wrong.
Even the bulls have been bearish.
Very extended here from 40. This is only going to 6,000. This chart would go back to 4,900 all the way to here. We've got to correct that. Otherwise you have a crash if you don't. So that's my methodology, is based on me figuring out these waves ahead of time, giving people price points we're watching ahead of time. And so they're not caught flat footed. They understand, hey, Dave's still a little, this 6,800 move yesterday morning is exactly, I said, we're going to run into a problem here. There's still a risk to 6,480. I'm sure everyone thought I was crazy. That's been my whole career. So when we dropped, it didn't surprise me. I am getting texts, I'm getting emails. It didn't surprise me. I'm like, well, I was playing. Yeah.
Okay. So But you feel we are in a bigger full wave here. We're just in a part of a bigger down wave.
That's right.
So if you did
Yeah.
go long here, it's a short-term
It's a
trade.
rally. It's a short-term rally. It's what I call a larger B wave. So if I can help everyone out here, this move down here is a 5-wave decline. 1, 2, 3, 4, 5. The typical on a large decline is also 5 waves the other direction.
So
Okay.
that's 5 waves already. So
Yep. So we're pretty
so what's
close.
your
Right in here is where I would expect if I took a big alphabet letter A and put it here, this would be A of a larger decline. A bigger B back up, and then another C down here. Most
okay, a
likely.
bigger
Most
wave down,
likely.
lower,
Yeah.
take out the
Because
lows.
yeah, we're going all the way back to 4,900 here at this point. We're going back to
Wow.
April of
Okay.
2025 to about 2,000 point rally. Okay. So a basic correction could easily take it down, doing this in my head, somewhere around, 6,200 or a little lower. Absolutely.
So,
And it would
but
be
so,
normal. It would be normal.
but it must be tough. I mean, to call the bounce because it doesn't seem like it's a
Yes.
very long-lived trade. You might just want to
Right.
be in cash and watch until maybe it rolls
Yes.
over.
That's another option. So with my 3x ETF service, what we can
Yeah,
do
let's
though,
talk about the
yeah,
3x
because that's where
ETF.
that
So
comes into play.
before we get into that, so I discovered the 3 times ETF right in '08.
Yeah.
And I'm a breakout trader. So in '08, nothing was working. We rolled over kind of earlier in the year before all the bad news came out, the Lehman Brothers, all the other ones. Before it really
Yeah.
rolled over. I mean, the market was rolling over. There was obvious signs of it way before it got ugly.
Yeah.
So none of my method wasn't really working. So I discovered these 3 times ETFs. They had been out for a while. I dabbled in them a little, but I really got addicted
Yeah.
because they move so fast.
Yeah.
Uh, and you have to be so careful because it really can, because they move so fast, because you can be in and out so quickly, it can become very addictive. That was my experience to a point where it got so bad for me personally, and I got so away from my system that I know works. I had to have a conversation with a trading psychologist, multiple sessions, to
Yeah.
snap me out of it because I got stuck and literally addicted to trading these. So
Yes.
I definitely trade them now. And so because I don't pick individual stocks to short when I know the market's overbought. I can just feel it. Like, just like what we had recently, even yesterday, my gut was telling me this is all wrong.
Yeah.
Uh, that for me, trading like the SQQQ that makes the most sense instead of picking one stock to go
Yep.
down. Like it's much
Yep.
easier for me to get a handle on that. Plus, it sets up the
100%.
same pattern, it sets up the same long patterns because it's an inverse ETF. So I just wanted to share with you my
Yep.
experience a little bit. And there are not too many guys talking about the 3 times ETF. So very curious
No.
to hear how you're doing this. Tell us, please.
It's funny that you mentioned that window because it was actually in 2008 and '09 when I started digging into the behavioral patterns of the 3x ETFs. So what you have to understand there is these are short term, these are not generally meant to be long term holds, although they can be in a large bull cycle. I will say that. But in general, we're swing trading these. And I'm using the same type of maps you're seeing here on my S&P 500 within a sector. So let's say it's biotech. The biotech sector is XBI, the one I use. XBI is the symbol. And that is going to be how I determine the LABU bull version, which is 300% of
That's the
XBI.
old 3 times.
Three
Oh, that was
times.
the XBI is the 3 times ETF. LABU was an ETF. Was it also 3 times? Or was
No,
just
your XBI is
that's
the
just,
underlying one time.
oh,
It's your
okay.
sector ETF, like
Oh,
QQQ. It's
okay.
the same thing.
Right,
Okay.
right.
So
Gotcha.
we could talk QQQ or anything, but let's just talk biotech as a sample. So I'll look at the XBI chart, similar to what viewers might be seeing on the screen for the S&P 500. And I will look at the XBI biotech sector, same kind of analysis you're seeing here, but over maybe a shorter window of analysis. And I'll say, listen, this pullback here, we just had an X% pullback. It looks like a wave 2 pullback. I think we're going to have a wave 3 up in biotech here pretty soon. We want to get in front of that. And so we will scale in. This is what I learned in 0809. You're never going to hit the bottom on a 3X ETF. Even if you're the best trader, you're probably not going to time it exactly right. So I learned through hard knocks lessons, kind of like you. You've got to work your way into the 3X ETFs within a range. So I give people a range I expect. We're currently in a pullback. I think it's almost over, but it could pull back a little more. So we're going to go in with a half position in this price range, and then I'm going to assess it in the next few days, and we might double up, or we might just sit with what we have. That's kind of what I do. It's 10% allocation to start. If we go to a full position, it's 20% allocation. Okay.
Of your total
And then
portfolio.
we're looking, of this ETF trading portfolio somebody may have.
Okay.
So
Okay.
someone has $50,000 towards my service, they're going to allocate. We're starting with 5,000 on the LABU, let's say. So I will then look at my opinion of where the next upside pivot is, like you're seeing on these charts, these pivots. I'm looking for that first wave up of the new cycle, roughly where I think it's going to go. And then I can just simply do the reverse math and say, well, if the XBI goes up, 4.2%, our upside is around 12 or so percent. It's just math. And we're going to look to trade out of this as we get close to that 10, 11, 12% gain. So flip side, if it's a bearish ETF, like let's say this down cycle we're in, I can say, well, we're going to bounce up on the S&P 500 around 6,800. There's risk of a pullback there. We can take the short 3X ETF if we wanted to and map that out. So the key here is anytime we're up 8%, this is my rule. If we're up 8% on any trade I put out, we're selling half. It's just discipline. I don't care if it goes up 32% later, because that does happen. We're taking half off at 8%.
Yeah,
I'm
definitely
adjusting the stops.
protect some of
Protect some gains, because these can reverse quickly on you. Even an expert like me, you can be wrong, right? So we want to be
raise your
mindful.
base stop? Do you raise the stop on
Yes.
the rest of it as well? Like maybe just below
Absolutely.
your entry point or something
Absolutely.
like that?
Absolutely.
Okay.
Raise the
Smart
stop.
trading. Brilliant trading.
Yep. And then that's when we're going for that last stretch. I can say, we're up 8%. I think we have a 20% upside from the start here on this one. We're going to sell half at 8. Let's see if we can stretch this and get close to that 20 that I'm expecting. So I'm expecting a 7% move on the biotech sector. That's 21% on a 3X. But let's not be too greedy. Let's be intelligent about it, because when you're trading leveraged ETFs, you need to have a very disciplined system. You need to follow it every single time. And
I'm not a fan of, let me just ask a quick question. Sorry to interrupt you like that.
Sure.
I believe in Occam's razor, which is keeping things as simple as possible. However, my question is, do you do options? Do you trade options on these at all? Okay.
That's a no-no for me.
Okay.
I don't do margin. I don't do options. That's again from when I was a younger, crazy buck trader. You learn lessons in the market, right? You respect the market at all times. That's advice I would give to anybody.
Well,
respect
I mean, technically you're already trading options, because that's how these funds are able to get that multiplier effect. They're taking the money and they're buying calls. That's
true.
how they're doing it. So
you're right.
In a way, you're already
doing it for me. Yeah.
So if you traded calls on margin in a 3 times ETF, you're exponentially growing your leverage. If you think about it.
And I've got subscribers that trade up. Yeah, I have subscribers that do trade options off of my, pattern, my maps that I'm giving them. That's on them though. Like if you guys want to do that, if that's your risk profile, that's
I'm
That's
sure they have
fine.
some great trades and some complete losers.
That blow up, right? As I say, if you go off the reservation, I can't help you. If you don't follow the patterns I'm giving you, it's on you. I'm just going to put it out there what I think is going to happen, right? And I'm going to guide you every morning. Every
Okay,
morning
so
there's a report.
so you put a report out every morning. You
Yep,
actually tell people which levered ETF to buy.
yep,
You give them a price range,
yep,
and you tell them the stops and you tell them targets.
yes,
That
like
I mean,
within
what
pennies.
more could you want from a service? I mean,
Yeah,
that's everything you could possibly want. So as the trader, you got to follow the rules.
yes. You have to follow the rules, which I do send you. I send you my rule book. It's quick. It's a one pager, but I send you my general, rules of engagement, if you will, best
Okay, where is it?
practices.
What's the website?
The 3xetftrader.com. It's pretty simple. And that'll bring you to the site that has a lot more detail. So once you get onto that site, you can click a link. It'll bring you to some more detailed information, sample charts and that type of thing, explanations. I don't charge much, honestly. Like, it's $40 a month. It's very cheap. I've got a lot of professionals from LinkedIn that are on this. I have one of the world's top traders has been following me for 5 years. I managed money for him for a while. You know what? I come from a Midwest background, and I have a philosophy that, you share. If you have special knowledge, you should not hold it. You should share it, and that's how you benefit. So I've
Love
always been
that.
that way. Yeah,
I love that. So
yeah.
everyone who's watching this, check that out. I mean, that's like three Starbucks coffees right there.
It's it's
And you're
almost
getting some
absurd. I have
direction.
people been telling me, some of the pros are like, "What are you doing? You'd be a couple $1,000s a year. We would pay it," and I understand that, and I might move in that direction more of heading towards professional advisory with the top guys, the top pros, the money managers.
Are you
Um,
doing any kind of video instruction or explaining to people how to understand Elliott Wave?
I
What are you
think
doing with
I'm I
that?
think I'm going to
Teaching it?
start doing that. Yeah, because years ago I did that. Like, many years ago, I did do that for a while, and people liked it. It's funny you said that, because I was just thinking I should probably be doing something a little more regular from a video perspective. Absolutely, yeah. Because I can teach it so people understand it enough to be dangerous. Yeah,
Definitely. I mean, it certainly sounds like it's worth watching at the very least and see,
at the least.
just get
Yeah,
it at the least, see what you're doing. Do you have a
yeah.
published track record?
Yeah, track records that on the website. Every single trade I post, obviously, like, it's within the ranges I gave to buy, within the ranges I gave to sell. So it's not 100% accurate, but it's a 90% accurate.
Right.
And
And
we
everybody's
have
results are going to be different. I mean, look,
a little bit off, obviously. Did
people
you follow me
always
exactly or not? Right?
people are going to weave in their own belief systems. I mean, I teach trading too. And
Yeah,
I mean, I've done coaching, and people show up with their own ideas, and they're always
Yes,
trying to re-engineer your system,
absolutely,
which is fine. It's
absolutely.
a human,
Yep, human
it's
nature.
a human behavior. Yep. And also you might have a little bit of slippage. The
Yes.
one time you say, well, I'm not raising my stop. I think you got to give it a little more room. It just throws off all your numbers just that one
Yeah,
time.
I think Dave's wrong on this one, which is fine. I get it. Because the what I do is very contrarian. At the time we're going long, nobody's going long. At the time I'm telling people to get out,
Yeah,
people are want
I
to
can
buy.
see that.
It
Yeah,
really
you're
is
you're going
amazing.
long when the market's dumping, and you're getting out.
Yep,
You're shorting when the market's going up,
yep,
which is first of all, buying is very natural for humans.
right.
Shorting, going
It's hard.
shorting is very unnatural. It's
Yep,
extremely unnatural, which is I find that the reverse ETFs, the inverse ETFs, for me are a little easier to trade just because I'm so used to, like, me personally, I follow the 60-minute charts on those a lot. And then I zoom in on a 5 minute, and I
yep,
look for cup and handles and flat
sure,
bases, and you can pretty clearly see the support and resistance on those. And they're the same patterns I trade on the upside. So I only
right.
have to focus on like four patterns, which makes it a lot easier for
Yep.
me. Um, yeah, so this is awesome, man. I'm definitely
I
going to
mean,
check it
the
out
track
myself.
record is almost 80% since 2018. It's literally 8 out of 10 trades for profit. It's that accurate. But again, like you said, they have to trust me. And new subscribers come on, just like I'm sure they're like, yeah, I don't know that we're going along the chip stocks. They just got slaughtered. Yeah, I get it. But this is why it works. So, but you have to know where those pivots are. You can't just blindly go, you know what? I think the market's oversold. I'm going to go long 300% today. You can't do that. You have to understand where we're at in the pattern. That's where I come in, basically.
Pattern. I mean, human behavior has not changed in
No,
hundreds of years. And when you
always the
really
same.
when you dig into the stock market and you dig into the charts, William O'Neill, How to Make
Yeah,
Money in Stocks. There's a
yep,
green version where he's got charts in there, railroad stocks from the 1860s,
yes, that's right.
other industrials
Crazy.
from the 1880s. They're the exact
Yep,
same chart patterns that we have today, and
100%.
human behavior doesn't change. So, and it's even with AI has not changed. They've been trying to figure out program trading since the 70s. It still
Yep,
hasn't changed. So
right.
there's certainly a huge opportunity here, and your service sounds very inexpensive. I'm definitely going to check it
It's,
out myself.
yeah, it's
So
inexpensive.
now here's a question. There are services that offer like auto trading where
Yep.
do you do that?
I think I've done it before with the S&P 500 futures, which is another service I run. Very similar to 3X ETF. You're looking at an S&P 500 futures chart here. We're trading that with the futures. It's not difficult for me to give advice on that. So I had an auto trade platform for that a few years ago. It was actually pretty successful. There's quite a few people interested. But I pulled it off the platform because I need to check into the regulatory requirements there. The futures trading
You have to be
service.
super careful. You have to be super,
Yeah, and
especially.
the service was based in Chicago. They're very well known, and they did the KYC with every customer. They would call my subscriber, get all the information, get all the paperwork. So we did everything correctly, but I took a little pause on it just to make sure that we weren't going to have a problem. But with that said, auto trading is very big. I've had many subscribers beg me to do my 3X ETF as an auto trade option because, again, you do have to be ready to enter and exit. You're going to get a text, you're going to get an email, you're going to get a post. I get that. But what if you're in a meeting so I get it, so I'm usually telling people though, every morning what the targets are. So they know ahead of time what they should be doing. It's
Okay.
not that they don't have to stare at a screen at
So,
me at all. So, but I am looking
okay.
into it. Yes,
And
absolutely.
so when something crosses your spot to enter or exit, you're sending a text.
Yeah, they're going to get an email with the full post and the whole theory behind the trade. They're going to see the chart I'm putting out. They're going to see the buy ranges I'm recommending, specific buy ranges, the exact target we expect to be hit, stop loss. Everything is like hand spoon fed. You just have to follow it. And the
Beautiful.
great thing I think with my service, having judged against others years ago, is every morning I do a pre-market report and I update you every day on what I'm thinking, what I'm seeing, and what I'm looking at. I want people to know,
Beautiful.
what is Dave thinking? Where's Dave getting nervous? Where's Dave getting bullish and why? Are we changing anything on the trade? Yes, no. That's it. It's not a lot of work. It's not day trading. You're not staring at a screen. You already know ahead of time what I'm watching. So, like this morning, I told everyone, let's close out our bear. We had a bear trade on the small caps. We're closing it out. Everyone's pretty bearish coming into this morning. We're closing it because if you see in my chart, I think we're close enough to my pivot lows that I don't need to be bearish right now. I need to start thinking about some bull trades here, which is funny, but that's how the markets best pay you.
Yeah. Yeah. And
To
that's,
fade, you fade the crowd.
yep. And that's a difficult thing
Very
to
hard,
buy. I mean, after
very hard.
yesterday, the
Yeah,
way it reversed, and I mean,
yeah,
we tried to rally for like a second. That rally lasted, I don't know, 7 minutes from down 300 and change on the NASDAQ to down like
yeah,
120, and then it just rolled over again, and it just never could make any progress and
yeah. And
closed on the
a
lows.
lot
Closing on
of
the
these,
lows is pretty negative symbol
well,
or
you're
signal
negative,
usually.
and you're bouncing up this morning. At least I haven't checked it since we've been on, but we were
No,
bouncing up early pretty
market's open
decently.
11 minutes so far.
Yes. But you have most of these movements on my charts are Fibonacci sequences. It's a whole nother realm of world, but Fibonacci retracements, Fibonacci movements are where I do the math. So most of my trades are actually mathematically based. I don't care really the name of the sector that much. I don't really care what companies are in the damn ETF. I'm literally doing math, and
Yeah,
math is where
and
the games are made.
and that, in my opinion, that's all traders should be thinking about.
Yep.
I am not. I think fundamental analysis is noise. It will completely throw you off. It'll
Yeah.
completely confuse you. You can make up a story to buy or sell any
Any
stock
stock.
on the planet.
Yep. That's
You
right.
could give it the worst garbage review ever, or you could give it the make it sound like the shiniest object you've ever seen in your life. I know I
Yep.
was a stockbroker
Yeah.
for 17 years. I was good at it. um,
Yeah, everyone's got a
so
story, right? So,
So, it's so easy. You look at Nvidia, like AI, you look at any name, you automatically register an idea in your head. So you mentioned
yep,
before, one of the guys you learned or studied Elliott Wave was he had it like a default bearish setting, you said.
100%. It was horrible,
Yeah, that's,
absolutely. And you can't
if you're,
make accurate assessments if you're already only bullish and only bearish doesn't work with this stuff. 100%
so
open mind at all times.
new traders, old veteran traders, if you have a default hook in your head, you know, I'm
Yep,
I am not going to go political at all, but I'm going to say there is a group of people who think Trump is going to ruin our economy. And so
yep,
no matter what, they're looking for the big crash to come. And so you get a
yep,
lot of haters out there. And then then you could make a great argument for they're going to spend $500 billion building out AI and data centers, and
of
somebody's
course.
got to somebody's
Yep,
got to put all these data centers up. Somebody's got to
yep,
manufacture all this equipment. I mean, we could have potentially one of the greatest economies of all time in the very
of
near
course.
future. And if we're bringing back so it's so easy to argue both sides of it. That's why you have to look at those charts. You have to look at the human behavior. So
Yep,
last question here. Um, you mentioned Fibonacci, but we were talking Elliott Wave. So are they
yep.
closely correlated?
Yes,
What? Okay,
100% correlated, actually. We just didn't get into it,
interesting.
but yes, Elliot determined the Fibonacci sequences were clearly how you figure out these waves. So we know the
Ah,
general
okay.
move is 1 through 5 on a bull market, ABC on a bear market, but within that, there's a lot of Fibonacci movement. So yesterday's bounce to about 6,800 was a pretty big bounce. That was a Fibonacci retracement. That's why I told everyone 6810 is going to be a problem. We got to 6797. There's no other way I could come up with that number. I can't look at a chart and come up with that number unless I'm doing some type of Fibonacci sequence. So those two
What
things,
stops you?
make sense.
What stops you from having that gut feeling that it's going to have trouble here and doing like a 40% trade, 40% of your capital? What stops you?
Past history when I was younger, I had some significant upside moves in short windows of time and also significant downside before I learned Elliott Wave. So that's when I kept bumping into this Elliott Wave stuff. And who keeps talking? What is this Elliott Wave stuff? And I spent 2 years studying it, but a lot of people just can't apply the theory. You have to, I'll repeat it again. You have to keep an open mind at all times, i.e. I could be wrong. Maybe I'm wrong. Okay. Let's assess and see if maybe I'm wrong. Maybe I've got to readjust what I'm looking at. And I'm willing to do that all the time. Right. But right now, the market will price in all of that excitement and all of that future AI and whatever it is, or biotech, whatever the sector is exciting at the time. It will price that in via Elliott Wave patterns, which are the collective human behavioral patterns. 80%, 90% of the people are bullish on AI stocks. The market's going to tell me that with the patterns. I'm going to know that
Right.
ahead of time. So
Exactly.
otherwise, how would you know? You don't know where the top is, right? We don't. But you can take an overlay of a sector, and you can take an AI basket of stocks, and I can apply the same patterns and try to make my assessment of where we're at. Where are we in the excitement level or the bearishness level? Because this past springs, a lot of these data center stocks were not doing well. I know this for a fact. They were dropping the small caps, one of which I won't say the name, but it was a $10, $11 stock, dropped to like 6 or 5, then got down to 4 in April when the market bottomed. It ran to 42. So from the April low, a 10x, is Applied Digital, APLD.
Oh, okay.
Exciting company with building really cool data centers, like top level data centers. So they're legit. But it peaked around 42 or 3, like in November recently, and that fifth wave of the market, it peaked. It's now 21. So very quickly, the sentiment went south. Why? Nothing probably changed. Nothing changed in that business in the last 4 weeks.
Right.
But the sentiment shifted. That's all it is. That's pretty interesting.
It's like,
fascinating stuff.
It's like in 08, you look at the earnings of Google, was Google even public in 08? I don't remember. But Apple and Microsoft, some of the biggest names, there was no dip in their earnings growth or anything. Nothing fundamentally had changed in some of the biggest name tech stocks, but they got crushed 50, 60, 70%.
Yeah. You know, and the market, as we all know, looks ahead. The market looks ahead about 9 months. And this is what throws off most traders.
Tough question.
Yeah.
What's the biggest loss you ever had?
Oh, it was, I can remember because this was probably in that 08, 07, 08, 09 window.
Mine too.
And I was getting a little too aggressive, a little cocky, a little younger trader. I put a lot of money into a small cap oil and gas stock. Had some really great guys involved. Same thing. The story was awesome. I'd speaking to management. You know, we got this huge gas field, blah, blah, blah. These guys had a history of hitting multiple hits. And I kept putting money into it. It didn't work out. I can just tell you that. It wasn't good.
Went to zero?
It went pretty much to zero. And that was like the last time I ever got that stupid. Was like, you can't fall for the stories all the time. You've got to stay 100% objective. You got to question everything. Always question.
Can you put a number on it?
Oh, it was over $500,000 at the time. It was a lot of money for me. I was young. I was a young guy. Yeah.
Wow. It's a big number.
It's lessons learned. You know, these things happen in the market. But you learn from it. You get back on the horse. You reassess. But that's when I really started getting into the ETFs, the Elliott Wave type stuff. Just because it's risk adjusted, it's really the way to go. Swing trading is really the way to go.
Dave, I'm so happy you told an honest story with an honest number because I get people on here and they tell me about their biggest loss and I hear a couple of grand and I'm like, dude, you're not really a trader. I mean, I could lose that in 5 minutes. I mean, that's
right.
You got it. And I say this every podcast. I'm going to say it again because I really want to people just have to get this deep in their head. Human beings learn by making mistakes.
Yep.
And the worst thing that can happen in trading is that you're a new trader, you start trading, you have like 2, 3, 4 wins in a row right out of the gate. You become cocky as hell. You think you're all that and a bag of potato chips. And I got to tell you, you and I never really had that much of a conversation before. I started as a stockbroker in the early 90s. And I was already, you know me as a trading computer guy. I was as a nerd as a kid. So I get on the phone. When you're a stockbroker in the 90s, you got pretty much a phone with a duct tape around your head. You're dialing for dollars. But I was recommending Microsoft. I was recommending Intel. I was recommending all the computer stocks because that's all I knew. And I could tell the story really well.
Yeah.
And my problem was I started from nothing. I built a book up, almost 500 clients, all in tech stocks. And I started in the beginning of 93. And
Good timing. Yeah.
Yeah. So so what I'm saying is getting the first few under your belt where, you think you get cocky and arrogant. I was so arrogant by the year 2000, I was only 30 years old in the year 2000. I had made a lot of money. I had got people, believe it or not, who were rock stars, literally rock stars that everyone on this podcast will know the names of as clients. I met the one guy who was a business manager for these other people, and I mushroom
Yeah.
clouded in
Yeah.
it was in '96, and I got my bell rung, like it almost virtually exploded. So, and that's when I learned how to trade. And I
Yeah.
had to wait because when it hit that top in March of 2000, the real bottom wasn't until March of '03. It was a long time. That bear market was long and painful. It was an 80% drop in the NASDAQ. Um, so that's when I really studied. I learned how to trade. I almost like dropped out of the business. I was a
Yeah.
wreck. So,
Yeah. It's tough.
Hap, thank you so much for sharing an honest story because we all, I want everybody to know you really, unfortunately, you have to learn from your mistakes. But if you guys
Absolutely.
listen to David and Elliott Wave, sounds like he's really got it figured out. At the very least, check out his service. I mean, $40 a month is nothing. And hopefully he's going to start teaching us Elliott Wave stuff very soon.
I'm going to have to do my own podcast, Eddie. I'll have you on.
Awesome. Awesome. I'd love to be on. Talk about all kinds of things.
No
So I
kidding.
sell computers to traders, and I also teach people how to day trade stocks, easy breakouts on my show.
Yeah. Nice.
David, thank you so much for coming out today. I learned a lot. I can't wait to check out your stuff. I'm going to put a link in this description to your site, and
Great.
I recommend everybody check it out.
Yeah, and they can reach out to me. My email address will be on the website. You can reach out to me at any time. Any subscriber, I respond within a few minutes. I've always been big on that. So I'm a very approachable and accessible. So
That's awesome.
Yeah.
Not many people are like that these days.
No,
especially
not available.
These newer fly-by-night young folks who come in and out of nowhere. So
Yep. Absolutely.
thanks again for showing up. I really appreciate it.
All right. Thanks, Eddie. You have a good one.
Take care.